Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, January 15th, 2014. We had a pretty aggressive snapback session after some pretty substantial losses in the previous day. We had the ES up 18 handles on the day and the NASDAQ was up 64. And internally we had good strength as well. We had plus 1,250 issues on New York and plus 1,300 issues on the NASDAQ side. The S&P VIX volatility index was down a full dollar, which definitely erased a lot of yesterday's pop. So kind of a negating of the previous day's price action, if you will. I kind of have a suspicion personally, which is a little bit out there from kind of the common thinking, is that we had our options unraveling on Tuesday, which was today's session. We had a pretty good bias that developed after the first hour of trade, and it essentially ran uninterrupted into the close. And that's usually what you see when you get a good directional move on the options unraveling. So perhaps the options traders were just taking advantage of the discount in price from the previous day and are planning to attempt to hold price up into option expiration on Friday. We'll see if they're able to be successful, but we'll take that one candle at a time. But for now, let's move on and take a look at the major futures contracts and see what they have to tell us. All right, first up here, the ES futures. You can see we definitely had a big candle to the upside here. That's the white body candle. But the thing to keep in mind here and keep in context is that within the parameters of technical analysis, we were still contained within the previous day's range. So today's range was completely contained within the prior day's range, which makes for an inside day. So what we have to be on guard for is a break out of that 2-day range, and once we break out of that 2-day range, we should have some pretty good movement as we unwind that inside day. This inside day isn't going to have as much energy wound up as it typically does, because it's not being kind of squeezed and contained in a narrow range. It's really wide ranging. The other thing to make note of at this point, though, is that note that we're a range high on the chart here. We have a 9, 13, 9 in places we've been talking about from the seeker. But what we're starting to see is volatility expand. And volatility expansion is often one of the footprints that you will see at important market tops. Not so much at bottoms, because at bottoms the volatility is already on the upswing. But when you do see volatility start to expand and do so fairly abruptly, oftentimes that is one of the things that indicates that a top is being put in place. So we'll take that one step at a time and see if that continues. But that's definitely something to be thinking of. Now, as far as levels go for the coming session, the previous high is going to be very, very important from Monday. That's coming about 1838.5. Then above that, the 7/8 level at 1844 call. It's going to be important. To the downside, again, that range boundary from Monday is going to be important at 1809.5. And if we release below that, then we'll come into play with the 50 DMA. Moving on to the NASDAQ side. NASDAQ side has a similar design, but it's a little bit different in that it's not an inside day. NASDAQ actually closed above the previous day's range, so we don't have quite that same design, and this chart is actually a little bit more healthy. So to the upside, the level to watch is going to be the high water mark of the move, which is coincident with the 6/8 level here on the Murray math box. So that's going to come in about 35.94. To the downside, we're going to have first support at Monday's low. And then below that, we're going to have next support at the 50 DMA at about 34.71, 34.72. I want to talk about the bonds now. The TLT has pivoted off of the exhaustion warning here. That's your 13 candle with the arrow below it. We pivoted and broke above the 10 EMA and even broke above the 50 DMA and had a nice little run to the upside here. But we have completed 9 bars up now in the startup phase of the seeker, so we're expecting either some sideways action right now or retracement back to the downside. If we do retrace back to the downside, we're going to have some pretty strong area here where the 10 EMA is going to be coincident with the 50, and we're going to have some pretty good support in that area. Gold's doing very little. Gold's basically sliding sideways. Was up a bit on Monday, Tuesday. They hit it pretty hard, taking off that little safety trade. So for now, we're still kind of in the area of the 50 and the 10 period moving average, with not too much to show for right now. The MACD is still on the cusp of turning positive and breaking above the zero line and developing some momentum, but it probably needs just a little bit more time. Moving on to the oil contracts. Oil contracts are still kind of hammering around this double bottom here. We do have 9 bars down completed, but the 9 bars down is not that well set up because we don't have much extension below candle 7 here. So for now, we're just barely hanging on to this 9 bar run to the downside. Note that the MACD here is negative, and the CCI has plenty of room to go to the downside before it gets oversold. Take a look at our individual sectors. The BKX was very, very strong today. In the biotechs, the BTK was strong, and the semiconductors weren't too shabby themselves, fueled by a pretty good move today in Intel. Definitely saw some money coming out of the XAU sector again. Precious metals not really in favor today, with the squeeze put on into the broad market. Taking a look at the individual sectors ranked from best to worst, the BTK was by far the top gun, up more than 4% on the day. We are starting to run into some overhead with the secret count, so be aware of that. The computer hardware index was also very, very strong, and the SOX was strong, so you can see the theme here. Definitely a NASDAQ-oriented day where we had some pretty good strength there. The oil services index outperformed the broad market, and so did the transports by a very small degree. You can see that defensive-minded stuff was pretty far down the list today. The defense index, the utilities, and obviously the XAU was low on the day. The BKX was basically just performing with the market today. All right, so here's a look at the BTK. The BTK had a big, powerful candle. I just want to point out the short-term pattern that's in place. We do have a trend termination candle in place. That's a 4-bar. That's a 4-bar pattern. First day's got to be up. That's candle 3 here in the seeker. The next day needs to be up. That's candle 4. The third candle of the pattern has to produce a new high but close lower on the day, certainly which candle 5 did by engulfing to the downside. That's the change-up candle, and a lot of times the change-up candle is kind of a sucker's candle because it comes before the pattern's actually complete. What happens then is those early shorts and the early unwinding of the long positions basically gets met with more demand, and then finally a climactic close to the upside, which I suspect is what we're seeing right now. Just a little bit. It's a little bit too bad that we didn't coincide with 9 bars up in the seeker. We're only 6 here. If we got 9 bars up in the seeker, it would definitely be a little bit more powerful. But nonetheless, this is an extremely important pattern. It's about 70% reliable. So definitely be aware of this. We've pushed above that 8-ace level, and now we're into the overbought territory on the Murray math box. So if this signal fails and we do continue to the upside, we've got to look at the plus 1-ace level. And then if we do continue to run to the upside, then we'll be the plus 2-ace level above that. To the downside, near-term support is going to be at the previous day's low. So Tuesday's low would be confirmation that signal made good on itself when we trade that, which could actually happen tomorrow. And then we'll see. To the downside, below that, there'll be a little bit of support at the 10 EMA, and then pretty good support at that 6-ace level. Semiconductors had a pretty spiffy day, breaking out to new highs. This is not that same pattern by any stretch that we saw in the BTK. This still has some room to climb here before we get up into that 8-ace level, which is really the key target to the upside here, about 562.5. Note that we're only 5 bars up in the 1 through 13 exhaustion run of the seeker, so there's plenty of room here for this to run to the upside if the bulls can keep the momentum going. Oil services are just basically using the static trend line here as support from this 9-bar run to the upside. So really nothing new technically. We're still intermediate term bearish by being below that 50 DMA. The 4-ace level is going to be key resistance if they can get up that far, and of course the static trend line here is going to be support until it's broken. Dow Jones Transports basically just range trading here for the last 3 days. this technically is a trend termination top to the upside, but it doesn't have that extension that you want to see to the upside. You want to see more buyers getting sucked in and the shorts covering. We don't quite have that here in this pattern, so this one have to have a little less. I would expect that this one have a little less teeth to it and be a little less interesting. BKX essentially covered up the previous day's candle. This data actually isn't reporting right, but the BKX, the banking index, is still kind of below the previous high water mark of the move. XAU looks very similar to what we saw with a gold chart with a little bit of an advance to it. When you're coming off of a bottom, usually the XAU will lead gold by a little bit, and we're definitely seeing that right now with the XAU slightly outperforming gold itself. Got a little bit of distance above the 50 DMA where that is not present on the gold chart. As far as the intermarkets go, there really wasn't all that much happening that's interesting. I'm just going to put a couple of them up here real quickly. The one I want to draw your attention to is the bottom chart here. This is the cumulative advanced decline line of the NASDAQ. It did record a new high in the move, which is very important and a very bullish development. So we're not seeing the potential rollover follow through to the downside here with the cumulative advanced decline line. And keep in mind that the cumulative advanced decline rollover will be at least coincident, if not leading a rollover in the overall market. The other internal measurement I wanted to take a look at was the NDX S&P cross. Right now the NDX did have some good relative strength versus the S&P. Saw it bounce up and take a shot at this previous trend channel, which is definitely a positive development, but it's not really that noteworthy until we take that out and make a new high and follow through. So let's make sure that we circle back and take a look at this tomorrow and the next day to see if we're still making new headway, because if the NDX picks up relative strength and can lead the S&P, that would be bullish for the overall markets. All right, folks, as always, thanks for listening. This has been Rich for Trade.